Hey, listen, if you guys like the show that we're bringing to you, make sure you share it with your sphere of influence. It really helps us out a ton, especially with people moving shops and different emails. Well, we'd like to make sure we spread the word. On to the show. Got a question for you. So in 2008, we retrospectively named that era the Great Recession. I mean, World War I was once known as the Great War until the next installment of global conflict. So here's the question. What's a good name for all the BS that we're going through right now? Now, I'd like to call it the reign of lawyers because they're the only ones that are going to make money with all these lawsuits. The real estate reset, or the great muck-up. Now, what says you? Let us know in the comments down below.
Rocket Pro TPO is closing down Rocket Pro Originate. That's where Rocket gets real estate agents licensed as loan officers. Really anyone licensed as a loan officer so that they can pay for the referral of business.
Now, don't get pissed at Rocket for that, okay? Every lender in the country right now is trying to do something like this. They're all kind of desperate. I kind of get it. Things are a little tough over here too. Their earnings reports stink, and for those publicly traded companies, their boards and their investors are pissed right now at their earning reports. They're saying, I don't give a crap about the market right now. These loan officers, these companies, I don't really care. Find a way to make more money for God's sake. God damn you. That's your job. So they all do. Going direct to agents makes sense at some level. There's a problem here, and I happen to know what it is. We've been looking at this stuff for years. And that problem is it's really, really difficult to get agents to go through the loan officer licensing process. Here's the problem.
The vast majority of agents fail to get through the state licensing program, even though it opens up another income vertical. For the agent that I've heard who's made it through the state licensing program, well, they failed to take advantage of the offer, so they quit the program. It sounds really good on paper, and then you realize you're herding cats. So good news, Rocket is not trying to turn realtors into loan officers. Bad news, it's probably because it didn't work.
Now, the point for the loan officer to take away from this is this. Desperate times makes desperate people. Look for more what you perceive to be regulation-bending moves by mortgage companies trying to stay afloat through the 2024 story.
Good news, Brian, I'd call this great news. According to Fannie Mae, mortgage interest rates are projected to come down and come down next quarter. We keep saying it, make it to fall before you fall. Inventory is coming and rates are coming down.
Yeah, and check this out. From this recently released chart from Fannie Mae, you'll know quarterly rate projections through 2025 in the highlighted yellow. And if you look above the red bar in the yellow, those are the quarterly projected average interest rates. They read respectively 5.8, 5.7, 5.7, and 5.7. Now, if that happens, and who would know? I mean, my God, it's Fannie Mae, right? If they're right, we will be revitalized with refinances. We might refer to this as the Roaring 20s Part 2. Now, the question is, how many loan officers are going to wash out in the next 2 months before they get this opportunity? Because the fewer the loan officers, the bigger the piece of the pie for those professionals who are remaining.
What's going to help those Spring Fis? That's what this year is going to be called, Spring Fi 24. What's going to help those refis is the simple fact that values are going back up, unless you're in Phoenix. Would you be surprised to hear that we've added $2 trillion in equity over the past year? And as you can see from these two Case-Shiller equity timeline graphs, values on the far right have definitely rebounded. Now, don't let this next point sway you or tarnish your confidence. The Fed doesn't seem to be thinking of a rate cut, anytime soon at least. But who cares?
Because mortgage interest rates are affected by the Fed balance sheet. So the Fed can leave rates alone and Fannie's projections could still be true. These are not conflicting points, you see. The Fed balance sheet is where we gotta watch to affect interest rates.
Generally, when the balance sheet goes up, mortgage interest rates come down. Look at this graph of the Fed Reserve balance sheet. Look at the two massive increases. Those would be 2008, the Great Recession, 2020, the condo COVID reset, maybe?
Anyways, right now, you'll note the balance sheet has been going down. That means interest rates have been what? Going up and will remain up. Now, if the Fed sniffs a recession coming, they'll pull out their billfold and start buying mortgage-backed securities again and make the Fannie Mae projections of lower interest rates a springtime reality. So again, loan officers, just understand this point. No matter what, just hang in there. Hope this helps.